Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it?
On January 3, 2009, while Bitcoin was being born, promising a new era of decentralized finance, Warren Buffett was dealing with something far bigger: the fallout of the 2008 financial crisis. As the first Bitcoin block was mined, Buffett wasn't looking at digital currencies. He was making billion-dollar moves, securing deals with Goldman Sachs and General Electric, betting on America's recovery. One side saw the future in crypto. The other stayed rooted in fundamentals. Was Buffett's focus a stroke of wisdom? Or did he overlook the next big financial revolution?
Bitcoin is really bad on privacy. I think the only people who do it.
For years, Warren Buffett's skepticism about Bitcoin seemed justified. It was volatile, unregulated, and often linked to speculation rather than real value. Every crash, every regulatory crackdown, and every failed crypto project only reinforced his belief that Bitcoin was nothing more than a bubble waiting to burst. But then, in an instant, on December 17, 2017, Bitcoin shattered expectations.
Holidays 3 years ago, Bitcoin is back above 19,000 for the first time since December 2017.
Mainstream financial asset, dominating global headlines.
The cryptocurrency making big gains this week.
On December of 2017, Wall Street took notice. The Chicago Board Options Exchange, CBOE, launched the first Bitcoin futures contracts, followed by the CME Group a week later. Institutional money was now in the game. For the first time, Bitcoin wasn't just for tech enthusiasts and libertarians. It was being legitimized by major financial institutions.
Down by 9%, the Paris market down by 9%.
But what happened next caught everyone off guard. As Bitcoin soared, Buffett didn't waver. In early 2018, as excitement peaked, he doubled down on his stance.
Rat poison squared.
Is this the moment Buffett underestimated a financial revolution?
In terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending.
For a moment, it seemed like Buffett was right. Bitcoin's meteoric rise turned into a brutal crash. The so-called financial revolution was crumbling just as Buffett predicted.
It put a little bit of fear back into the marketplace for some of those people who have been long some of these cryptocurrencies. Now,
what you're seeing now, from my view, is a bit of panic selling. Investors that were in it maybe caught the hype in November, December, or projects that raised funds.
Few people remember this, but in February 2019, JP Morgan, the same bank whose CEO once called Bitcoin a fraud, suddenly launched its own digital currency, JP Morgan Coin.
Why is Bitcoin a fraud?
Yeah, so separate blockchain, which is a technology, from Bitcoin, the currency. And now there are multiple currencies, and so I'm talking about not Bitcoin per se, I'm talking about currencies. You know, the first, and the reason, and I'm not saying go short, because I know Jim Chanos was up there. You know, Bitcoin can tell $100,000 of Bitcoin before it goes down. So this is not advice on what you do. My daughter bought some Bitcoin and it went up, and she thinks she's a genius now. But it's I did refer to it as like the tulip bulb crisis of the 1700s, whatever. But here's the reason: governments, the first thing they do is form a currency. They like to control the currency. They control it through a central bank. They also like to know who has it, where it is, where it's going. Okay, and you just saw China just is closing down the Bitcoin exchanges. And what all I ever said is that at Bitcoin, the bigger these things get, the more governments, right now, they look at it as a novelty. You know, they love in Washington, talk about, oh, this is technology, we love technology. Wait until someone gets hurt. Wait until it's used for illicit purposes, which it is somewhat used for illicit purposes. They close it down. And that's my point. So it's not, you can argue and I also said there's a good reason for it. If you're in Venezuela or Ecuador or North Korea, you're better off probably using Bitcoin than using their currency.
At first, it seemed like an isolated move. But JP Morgan wasn't alone. One by one, major institutions, once skeptical, began making their own bets on Bitcoin.
Good evening. The latest UK case of coronavirus is the first to be contracted within the country rather than abroad. The man walked into a GP surgery in Surrey feeling...
Now to growing concerns about the deadly coronavirus officially hitting the U.S. Here's what we know.
As the world shut down, fear took over. Stocks crashed, businesses collapsed, and Bitcoin, it fell harder than ever, plunging from over $10,000 to just $3,800 in a matter of days. It seemed like Buffett had called it right. In times of crisis, cash was king, and Bitcoin looked more like a risky gamble than digital gold. If Bitcoin kept crashing, why did investors, both retail and institutional, keep coming back? What made it so different from anything before?
The gambling instinct is so strong, and you had millions of people that were getting checks in the money and sitting home and finding out that they could have a roulette wheel in their house, and they had all the appeals of gambling that are used to get people to go to Las Vegas, and you can do it in your home, and they had money, and we've had an explosion of gambling. Essentially, people love the idea they're going to make more money tomorrow. And
Buffett wasn't wrong. People were chasing risk like never before. But here's the thing, not everyone saw Bitcoin as just another gamble.
Right. The reason that Bitcoin is magical is because there's only 21 million. I can create more real estate in New York City. I can create more cars. I can create more luxury watches. I can create more gold. I can create more shares of stock. I can create more bonds. I can create any commodity. They're commodities by definition. Given enough money and time, I can create infinite of any of them. Bitcoin is a scarcity. Okay, name another scarcity in the world, right? And technically, it's not clear there is another scarcity, right? A scarcity is something of which it is absolutely capped. If the price goes up by a factor of 1,000 or 1,000,000, it is absolutely capped. That is not the case with gold, soybeans, silver, stock, bonds, real estate, single-family homes, ships, planes, trains, nothing else. Everything else could be manufactured. And of course,
Michael Saylor stands firm on Bitcoin's biggest strength, its finite supply of 21 million coins. But what if this advantage is about to be challenged in a way we never saw coming?
Well, the arrival of quantum computers could be even more historic than that. We're now in the initial stages of the next revolution. We're talking about a new generation of computers, the ultimate computer.
Michio Kaku explains that quantum computers are insanely powerful because they can process multiple possibilities at once. This could be a game changer for many industries. But here's the catch. Bitcoin and other cryptos rely on encryption that is nearly impossible to crack with today's computers. If quantum computers evolve fast enough, they could theoretically decrypt Bitcoin security. Private keys, once thought to be unbreakable, could be exposed in seconds. If an asset's greatest strength can also become its downfall, is crypto truly the future, or a ticking time bomb? Does Buffett's golden rule of investing still stand, in a world where technology is rewriting the rules?
Yeah, we try to, we try to follow Ben's principles in terms of the attitude we bring toward both investing and in buying businesses. But the most important thing what we're trying to do is we're trying to find a business with a wide and long-lasting moat around it, protecting a terrific economic castle with an honest lord in charge of the castle. And in essence, that's what business is all about. I mean, you may want to be the lord of the castle yourself, in which case you don't worry about that last factor. But what we're trying to find is a business that, for one reason or another, it can be because it's the low-cost producer in some area. It can be because it has a natural franchise, because of service capabilities. It could be because of its position in the consumer's mind. It can be because of a technological advantage. For any kind of reason at all, that it has this moat around it. And then what we have to decide is all moats are subject to attack in a capitalistic system. So everybody is going to try, if you've got a big castle in there, people are going to be trying to figure out how to get to it. And what we have to decide, and most moats aren't worth a damn in capitalism. I mean, that's the nature of it, and it's a constructive thing that that's the case. But we are trying to figure out why is that castle still standing, and what's going to keep it standing or cause it not to be standing 5, 10, 20 years from now. What are the key factors, and how permanent are they? How much do they depend on the genius of the Lord in the castle? And then if we feel good about the moat, then we try to figure out whether the Lord is going to try and take it all for himself, or whether he's likely to do something stupid with the proceeds, etc. But that's the way we look at businesses.